Welcome back to Pioneer Pips and Profits. In the previous video, we broke down the US dollar, the most dominant currency in the world. Now, let's move to the second most traded currency in the Forex market, the euro. And here's the interesting part. Unlike the dollar, the euro doesn't represent just one country. It represents an entire region. The euro is the official currency of the Eurozone, which includes 20 European countries. Major economies like Germany and France play a huge role in its strength. And instead of one central government, the euro is managed by the European Central Bank, the ECB. So right away, you can see, this currency is more complex than the dollar. Just like the Fed controls the dollar, the European Central Bank controls the euro. And once again, interest rates are key. When the ECB raises interest rates, the euro becomes more attractive to investors, and it strengthens. When rates are low, or when the ECB prints money through quantitative easing, the euro tends to weaken. But here's the twist. Because the Eurozone includes multiple countries, the ECB has to balance different economies at the same time, and that's what makes EUR movements very interesting. Next, we look at economic data. But with the euro, not all countries are equal. Traders focus heavily on major economies like Germany, France. Key indicators include GDP growth, inflation, unemployment. Strong data from these countries usually pushes the euro higher. Weak data, that puts pressure on the currency. Now this is where the euro becomes very sensitive, politics. Because we're dealing with multiple countries, events like elections, policy disagreements, economic conflicts between countries, can create serious volatility in the euro. A perfect example? Brexit. Even though the UK wasn't part of the euro, it still created uncertainty across Europe and impacted the EUR. Finally, we have trade balance. The Eurozone is a major exporter, especially countries like Germany. When exports are strong, there's higher demand for the euro, and it strengthens. But if imports rise or exports fall, that can weaken the currency. So to summarize, the euro is mainly driven by ECB interest rate decisions, economic performance of key countries, political stability, and trade balance. But always remember, the euro is unique because it reflects an entire region, not just one economy. In the next video, we're moving to one of the most interesting currencies in the market, the Japanese yen, a currency known for its extremely low interest rates and its powerful role as a safe haven asset. You don't want to miss that one. If you found this video helpful, make sure to like, subscribe, and turn on notifications, because this series is designed to give you a complete understanding of how currencies actually move. And I'll see you in the next video.